Hey everyone, it's Justin Merrill. It's March 20th, 2010. It's a Saturday. I want to discuss some things I saw in the news over the week, some things that caught my eye, and they all are relating to China, currency, and trade deficit. First thing, and I went on a Bloomberg, and I saw these two articles, literally like two headlines apart from each other, and I found it just a little hypocritical or ironic. First one being, China and Japan reversing holdings of U.S. securities, Treasury securities, again in January 2010 for the third consecutive month. Now, the article just below that said Congress wants China to raise the yuan to reduce the trade deficit, and Chuck Schumer and Lindsey Graham have introduced legislation that would put pressure on the Treasury to count China as a currency manipulator, and part of the legislation would put import duties on our trade with China. Now, that's only going to hurt Americans because it's going to increase the cost of everything we buy from China. Won't hurt China as much. So, again, politicians not understanding economics. Well, most economists, with the exception of Paul Krugman put out a piece recently saying how he thinks that he's supporting the initiative that China needs to raise their currency, which, I mean, I don't believe in China doing the currency manipulation either. I think they should let their currency float with a marketable exchange. But we as Americans can't blame them on our problems for them pegging their currency to the dollar. Anyways, Paul Krugman has some opposition aside from me here on this matter. One of them being Stephen Roach, who is over in China. He's saying that you can't blame China for all of the trade deficit problems that America has. And I would fully agree with him. I do think that China is only half the problem. The other half of the problem is something I'm not sure how many people are aware of, but it's something called the Triffin dilemma. I'll get into that later. First, I just want to cover the news for the day. So, there's an online debate going on between, online and print, between Krugman and Stephen Roach and some others about what we should do if we as Americans have the power to do anything in regards to China's currency manipulation. And the reason I found these two articles ironic on Bloomberg was that on one hand, China is reducing their holdings of our securities, and on the other hand, we're demanding they keep buying our securities and also that they raise their currency, considering how much debt they own of ours. We don't have the position to be telling them to do anything. So it's all hearsay for now. And the other thing I want to talk about is back in Obama's one-year State of the Union address, he talked about, I remember him mentioning he's going to set up a presidential executive order to double exports in 5 years. Now, I heard this and laughed because, one, how is a president going to double exports? The only way that a president could reasonably do that either is through direct socialist state intervention or by totally devaluing the currency, neither of which seem good to me. The other alternatives are free market options, which the president doesn't have control over that except for two ways: lowering taxes and reducing restrictions or regulation on the economy. But of course, Obama's not going to do that. We know that he's trying to support and promote exportation through his Keynesian ways. So, I actually found on March 11th, he signed the executive order, and I found the link for it. I'll post it in the sidebar so you guys can check it out. At first quick glance, it looks like a pretty toothless executive order, but there's a couple things in here that I want to either bring to attention or laugh at. One of them being he's going to have a committee called the Export Initiative or Export Promotion Cabinet, the EPC. Another one will be so their job is really to go around and tell people we need to sell more stuff overseas. American businesses, we need to sell more overseas. Another one is Federal Export Assistance. Beware, that's a code word for subsidizing businesses selling overseas with U.S. taxpayer dollars. I don't really feel like paying taxes just so businesses can sell their stuff overseas. Another one, a big red flag I saw, was macroeconomic rebalancing. Now what's that? It says in the text that the Treasury and the G20 will create sustainable global growth in the rebalancing of the macroeconomy. Now, this is again is code word for what that means is the only way that they can have control on that, since we can't control the other currencies, we can only devalue our own. So by devaluing our currency would make our goods and services cheaper overseas, would create more demand, which sounds like a good thing until prices of everything we buy, since most of what we buy that comes from overseas, prices of everything we buy go up. So you might have a job, but you just won't be able to pay for anything that you buy. You won't be able to pay for gas at the pump or milk at the grocery store. Slight exaggeration, maybe, hopefully, but that's the gist of it. You're trading off natural unemployment for you're lowering what would be the natural unemployment to have inflation or devaluing of the currency. I don't think that's a good trade-off. Maybe people who are jobless might think it's a good trade-off, but what's the point of having a job if you can't buy anything? And the last thing on here was reducing barriers to trade. Reducing barriers to trade is another code word for going overseas and begging other people to take their imports, tariffs off of our goods and services. Again, it's only going to be a reciprocal agreement, which, I don't think Obama has set a precedence for lowering regulation of imports and exports, which is the only thing I'm aware of is he's raised tariffs on China importing steel and other items into America. So just some things, again, all related to China, trade deficit, exporting. I'd like to hear your thoughts on that. Go ahead and subscribe so we can get updates on future posts, and I'm going to keep talking about this. I'll talk to you guys later.